Hello and welcome. So the new Income Tax Act of 2025 is here, and you know what that means. It's time to get up to speed. Mastering all the little details is absolutely key if you want to give the best advice and keep everything compliant. Today, we're going to tackle a really important piece of the puzzle, Section 32. This one covers some of the most common and, frankly, most impactful deductions you'll ever see. So let's get right into it.
So are you sure? I mean, really sure. This is the question that every single tax professional, every business owner needs to be asking themselves right now. You see, this jump from the old 1961 Act to the new 2025 Act, it's not just about memorizing new section numbers. It's all about getting a real grip on these new, streamlined rules to make sure everything's accurate. Because let's be honest, missing even one legitimate deduction, that hits your bottom line hard.
And that's where the hero of our story comes in, Section 32. Think of it like a specialized toolkit, just for deducting those everyday business expenses. And let me tell you, understanding this section inside and out, it's not just a nice to have. It's absolutely essential for figuring out the correct taxable profit, whether it's for your clients or for your own business.
Okay, so here's how we're going to break it all down for you. First, we'll talk about why these deductions are so important. Then, we'll get into the legal stuff, the framework of Section 32 itself. After that, the fun part. We'll decode each deduction, see how it works in a real-world case study, talk about compliance and some common mistakes, and we'll finish up with a super useful checklist.
All right, let's get started. Section 1, Unlocking Business Deductions. You know, if you think of the Income Tax Act as this massive rulebook, most of it talks about general expenses. But Section 32, it's different. It gives you these very specific, crystal clear permissions for certain expenses that are, frankly, the bread and butter of running any business.
Okay, moving on to the legal framework. It's always good to ask the why, right? Why does Section 32 even exist in the first place? What's its main job in the new act? Once you understand its purpose, applying the rules becomes a whole lot easier.
Well, it all comes down to fairness and accuracy. The whole point of this section is to make things less confusing, to reduce that gray area. By spelling out exactly what's allowed for these common expenses, the law is trying to head off arguments and lawsuits. The goal is to make sure businesses are taxed on their actual profit, what they really earned, not just their total revenue. It's all about finding that true bottom line.
All right, now for the main event. Let's get into the nitty-gritty. We're going to break down the key parts of Section 32, piece by piece. This is the stuff you're actually going to use every single day in your work.
First on the list is something you see all the time: bonuses and commissions for employees. This is handled by Section 32, Clause A, and it's all about whether you can deduct these payments.
Now listen to the wording here. It's really specific. The law says yes, you can deduct it, but, and this is a big but, there's a critical condition. The payment has to be for services rendered. And, super importantly, it can't just be a sneaky way to hand out profits or dividends. This is a classic anti-avoidance rule built right into the law.
So here's the bottom line. To claim this deduction, you have to prove it's the real deal. It's all about substance over form. Is it genuinely a bonus for hard work? Or is it really just a way to pay out profits to a shareholder who also happens to be an employee? The only way you can prove this is with solid documentation, and I'd bet the upcoming Income Tax Rules 2026 are going to spell out exactly what you need. Things like employment contracts and official bonus policies.
Okay, let's move on to the second big deduction under Section 32, interest on borrowed capital. I mean, almost every business out there has some kind of loan, right? And the interest you pay on that can be a pretty hefty expense.
Now, the wording here looks simple enough, but the most important part, the phrase you need to underline, is for the purposes of business or profession. This direct link, what we call the nexus, between the loan and how it's used in the business, well, that's everything. It's the foundation for claiming this deduction.
And this brings up a really critical point. Let's say you take out a working capital loan, to pay for things like inventory or salaries. The interest on that is deductible right here under Section 32. But what if you get a loan to buy a big new machine? That's different. The interest on that loan usually gets added to the cost of the machine, and then you depreciate it over a few years. It gets capitalized, not expensed immediately. So, again, having flawless loan documents that clearly state the purpose of the loan, absolutely non-negotiable. Okay, so we've talked a lot about the theory. But theory is one thing, right? Let's look at how this all works in the real world. A good, practical example will really make these ideas stick and show you just how much of a financial impact Section 32 can have when you get it right. So let's meet our example company, Innovate Solutions Private Limited. They're a tech startup, they've had a pretty good year, and they've paid out some performance bonuses. They also have a working capital loan. So let's crunch the numbers and see what happens to their tax bill when we apply these Section 32 deductions. Just look at the difference this makes. Innovate Solutions starts out with a profit of 50 lakh rupees. But then we apply Section 32. They can legitimately deduct 5 lakhs for their employee bonuses and another 2 lakhs for the loan interest. And just like that, their taxable income drops from 50 lakhs all the way down to 43 lakhs. That's a huge tax saving, and it's all perfectly legal, just by applying the law correctly.
Okay, so now that you've seen the upside, we have to talk about staying on the right side of the law. Knowing the rules is one thing, but avoiding the common traps and pitfalls, that's the other half of the game. And honestly, this is where a lot of businesses slip up.
So let's go over some crucial do's and don'ts. On the do side, it's all about documentation, documentation, documentation. You need to have detailed contracts and clear policies for everything. On the don't side, just don't try to get clever in the gray areas. Trying to pass off dividends as a bonus? That's a massive red flag for the tax department. Same goes for trying to claim interest on your personal car loan as a business expense. That's a classic mistake. The absolute key here is to have a clean, clear, auditable paper trail for every single deduction you claim.
All right, to pull all of this together and make it super practical, we've put together a final checklist for you. Think of this as your go-to guide to run through before you finalize any tax calculations.
Okay, step 1. Go through and identify every potential expense. Bonuses, commissions, interest, all of it. Step 2. Look closely at every single bonus payment and ask yourself, is this genuinely for services rendered and not a disguised dividend? Step 3. For every loan, confirm that the money was borrowed for a legitimate business reason. And finally, step 4, and this is the big one, gather and organize all your supporting documents. We're talking contracts, loan agreements, bank statements, board resolutions, the whole shebang. Trust me, being proactive like this will make any future audit or assessment go so much more smoothly.
And that wraps up our deep dive into Section 32 of the Income Tax Act 2025. I really hope this explainer has given you some clear, actionable insights you can use. If you found this helpful, it would be great if you could like, subscribe, and maybe share this with your colleagues.
And just before we go, the standard disclaimer. Please remember, this video is for educational purposes only. Tax laws are complicated and they can change, so you should always consult with a qualified professional for advice that's tailored to your specific situation. Thanks so much for watching.